extraordinarily risky, that the global economy is not on firm footing. The unemployment rate in Europe and America remains very high, and this is an experiment that has been done over and over again, and we know almost surely what the outcome of this experiment is. When you impose austerity, and an economy is weak, it reduces spending, reduces what economists call aggregate demand, and that means output is lower than it otherwise would have been, and unemployment higher. And that means that the fragile recovery will be delayed, put off track, could push us into a double dip. So I think it's extraordinarily misguided. Now, I understand the motivation, concerns about the deficit and the debt. The financial sector, the banks, were extraordinarily short-sighted in the years before the crisis. But the financial markets are again being short-sighted because no economist, no businessman would ever look at one side of a balance sheet. One side of the balance sheet, you look at liabilities, the other is the assets. National debts are the liabilities. But what about the assets? So if we spend money, Europe, America spends money for investments that yield returns, even very modest returns, it will stimulate the economy in the short run. That will generate more revenue. It will lead to more growth in the long run. That will generate more revenue. And the long-term national debt will be lower, not higher, lower than if we go down the austerity route. So we shouldn't be focusing on the deficit today, tomorrow, next year. We should be focusing on the deficit 5 years down the line. And there, austerity is a counterproductive strategy.